All right, folks, welcome back. This is our weekend edition of the ICT Mentorship, August 20th, 2021. Dollar daily chart here. As you can see, we very, very handsomely traded it back up into, notice the bodies of the candles, respecting the old premium high of the volume imbalance. Now, before I get into it, notice this candle right here, how it takes out this high. So this right here is a stop run. This whole entire wick, ignore that. Okay, pretend it doesn't even exist there. So if you do that, refer back to this candle's low and this candle's high. So between this candle's low and this candle's high, ignoring all this wick here, you get a fair value gap. Okay, so by doing that, split that range in half. And you can see we just about got there with this run in intraday. But we worked inside of this down candle, ignoring the stop run here. All right, so just a real nice delivery, what we were looking for this week. And I want to take you back to Wednesday, though. Notice how this candle looked indecisive. Now, when you see candles like that, and you studied anything like Steve Nielsen's books or whatever, these candles can lead to indecisiveness, not really knowing what's likely to happen. When order flow is bullish and we have yet to trade to an objective or take out buy-side liquidity or relative equal highs in a more meaningful manner, because it only poked up above it a little bit right here. I like these kind of candles because it sets up a large range day. Now, it may not happen the very next day, but usually within the next day after that. So in other words, if you have an indecisive candle, what is an indecisive candle? You're probably asking yourself. When it has like a little bit of a wick on the lower end, a little bit of wick here, and the body is next to nothing in terms of size. Very little difference between the opening and closing price. That indecisiveness leads to a directional move one way or the other. Now, if this is leading to or a precursor to magnitude or movement in a directional bias, the question is what was our bias? Bullish. So that way we can anticipate the low being near the opening price the very next day or the next day after. Now we know this day here is Thursday, so it might make an energetic run into this level as we were expecting, and it trades up in there and it creates the weekly range objective. And then the opening on the next candle opens here, small little run higher, profit taking, algorithm goes into consolidation into the close of the week, and here we are, we're trading inside of the old volume imbalance and still above the old high here. So it's an interesting study for you to go back through and look at how candles like this one here, when there's a directional bias, leads to an energetic run in the direction that your underlying bias would be. Now, not your bias, but the algorithm bias. Where is institutional order flow pointing to? Where is it taking us? So just go through your charts and you'll see indecisive candles leads to a big range day. Well, here's one right here. Indecisive candle. Very next candle doesn't do it, but then we have it here. And then the market rallies hard. Here's one here. Indecisive candle and bullish, rallies hard. Big range day here. So for a day trader, it's just a really good way of expecting a big pop or a large range day. So as a day trader, you really need that, because if the market's real quiet and stagnant, not offering a lot of movement, it's not going to be conducive for you to have a lot of opportunity for day trades. So that's why most day traders don't make money. They fail, they quit, or they try to do something else besides day trading. But once you understand what you're looking for, day trading is actually very lucrative. You can go in and find very choice setups a few times a week, and if you look at these higher time frame charts like this with a bias, then it's beneficial to anticipate significant price runs after indecisive candles. Now, I'm not trying to promote this as a specific thing, okay, or a gimmick. It's just I'd like to see that. And if you go back and listen to our commentary on Wednesday, you can see that I'm anticipating it still to go higher here. I didn't expect this to be a run here and then retracement, because we have all the backdrop, as I mentioned on Wednesday's video, and obviously yesterday filled in some gaps as well. But price did in fact what we were looking for, which is nice for an August. Dollar index hourly chart. You can see here we small little consolidation, rammed up into 93.70-ish, just a little bit above the 70 level. Would have been nice to just tag the 93.80 level. I mean, I would have been more polite, but it just stiffed it, said no, ain't happening, and then consolidated, and we're back inside the daily volume imbalance. If we need to have a deeper retracement, I'd like to not see that, to be honest with you. I'd like to see it just work itself outside of this range on the upside and make an attempt to go lower. That's what I'd like to see. But when we get into Euro, we'll talk about some things that may be underway that may impact what dollar index actually does. But if we do break down, come outside of the discount low, the old daily volume imbalance, which is what this level is here, and this is the premium high level of the old daily volume imbalance. If we break down, right in here is a nice level. We have a fair value gap, bullish order block, sell side liquidity. So it could come down in there and then pick up more orders and run. That would really sell the idea to retail that we've topped. And to me, that's good, because that would take us down into a short-term discount. It would upset trend line support from here to here and where we're at right here. So if it runs down, you know, this would be a nice level to take us into. Now notice I'm not saying trend line phantom in the sense that I teach it like here, here, and then now it's right up in here. Normally we're anticipating this. That's why it's not being called a trend line phantom. This is just too juicy for my liking. It's, to me, you know, if we go down, this is where I'm watching dollar. Dollar index, 15-minute time frame. Again, you can see how we rammed up in on New York open kill zone. Broke down, market structure, broken here. Day of the week, New York session, and we break down here. So it's probably done for the week. Comes in, fills in the small little fair value gap. Notice the bodies here. Yes, there's a small little increase from the opening that's outside the scope of this low to high, but the bodies are respecting it. And then one more time, passed up into it there. Then displacement to the downside, cleaning up all these really nice relatively cool lows where sell side liquidity would be. They dig into it here, come back in one more time, and pass underneath the short-term low. But doesn't really make an attempt to get below here. And all of this is just sloppy. And it's inside of a larger trading range. So lots of short-term support, which if they do drop it down, as I mentioned in here with this order block, that would be an area I'd look for some support to come in. If that were to fail, then we'll have to revisit things on that note. But right now, I haven't changed my mind about where I think dollar is going and or euro, but there are potentially going to be some speed bumps in euro dollar. So let's take a look at that now. Here's euro dollar daily chart. Bearish breaker, mean threshold, we already went through all that. Indecisive candle again on Wednesday, like on dollar. Then we had a nice decline down, and then we went just a little bit lower than Thursday's low, and then right back up into the old low. Just typical, and we've already went down for the whole week, and now we're just seeing a return back to old structure. So sell side liquidity pool here, still in my mind is where it's likely to go to. It's not going to be a straight shot into it because Euro Pound has been wanting to rally, and the last 2 days we've seen that. So drop down into the hourly chart on Euro Dollar. You can see we went right back up into that old daily low, and we're consolidating in here. Okay, so if this is consolidation, cable is going lower, that allows Euro Pound to rally. So it'll be interesting to see how long they hold this trading range, and it could sweep a little bit above and go back into the 117.10, 117.15 level, but I'd rather not see that. All right, and here's 15-minute time frame on Euro Dollar. You see just an overall consolidation. Drops down below Thursday's low and rallies. Short-term little market structure right there. And the market drops back down into this candle right here, which is the lowest down close candle. Not this one. Okay, not this one. We're looking at the lowest down close. Trades into that. Here, that's your order block. If you go on YouTube, they're going to point here. And price rallies, comes back down in, mean threshold, last down close candle, picks up more orders there, then the algorithm redelivers above the intraday high, and then to the high on Thursday is slightly swept here, and then one more pass into it here. So for day trading purposes, you can see it did offer something in terms of a TGIF trade, and you can do a search on the forum typing in TGIF, and it'll take you to the post where I was discussing what the TGIF trade is. And finally, British Pound, daily chart. Small little continuation on what's been going on all week, lower prices. We swept the rejection block, which is the lowest down close candle, closing price. Swept through that, and we still have the low here and here where sell-side liquidity rests, and I still think that's the objective for cable. Once it trades there, just so let me get this in beforehand. Once it trades here and really digs into the sell side, I'm neutral. I won't have a bias. Like once it gets there, I'll have to be waiting for something new. So, and I'll teach a little bit more about that next week. But for now, just know that this is where we're still looking for cable. Might need to come back up into this range a little bit. I don't want to see any kind of like wild craziness, but you know, we'll see what we get in regards to next week's trading. Pound dollar hourly chart. Again, just a small little continuation and then consolidation on the week. Really, really nice back here on Wednesday. And the heaviness I was looking for and discussed on Wednesday's midweek commentary came to fruition like gangbusters. So we'll see if we get the heaviness continued into next week. That's what I'm looking for. And finally, on the 15-minute time frame, pound dollar chart, just small little continuation, consolidation all together. Notice that it's not trying to rally though. That's important. Now that's not to say that it's not going to rally on Sunday into Monday, because obviously it could. But if it were to have some rallying on Sunday into Monday or Monday's trading, trailed stop losses are here. And I think that's about it. So it could trade up into this down close candle for a mitigation block and clean up buy side there. And that'd be nice between this high to this low. That would take us into a premium and potential optimal trade entry there. So if it traded to that level or thereabouts, I think that would be reasonable for another leg lower, but we'll see. It's always 50-50 on weekend commentaries because Sunday can do whatever. They could be dropping bombs somewhere and set off all kinds of waves through the marketplace, and then there it is. We are still in a black swan environment. Things can just pop off anywhere that the central banks will use as a smokescreen to make a sudden beeline for a big, large pool of liquidity on both sides of the marketplace, buy side and sell side, and then take it right back to the middle. And everybody's going to be sitting there and thinking, man, what just happened? Scared to take the next move. So that's where we're at. That's what's likely to happen. And the closer we get to the end of the year, the more likely it's probably going to happen. Okay? So that's going to be it. Real short, sweet. Enjoy your weekend. Be safe. And I'll be back on Monday with some more lessons and lectures.